Good morning. Hi, I'm Bill Hayes with Kenilworth Asset Management. And today I want to talk about a little bit about year-end tweaking, if it were, as it were. What I'd like to talk about is what do you do with your portfolio towards the end of the year, obviously because we're coming into the end of December here, and what to prepare for the beginning of next year. If you own bonds, one thing you might want to be looking at in bonds is what can happen with your bonds and going forward. And with interest rates as low as they are they going to stay low? Yes, they are. Ultimately, though, will they go up? More likely than not. If they're as low as they are now, it's a lot tougher for them to go down, a lot easier for them to go up. So what you want to do is, if you have bonds, especially corporate bonds that you might have in an IRA or something like that, what you can take a look at is possibly, if you have shorter term bonds, let's say 2 or 3 years, and if you can sell them today, and capture most of the income that you'll receive over the next 2 to 3 years, then take a look at possibly shifting out of your bonds and maybe shifting into equities. Now, why would I say shift out of bonds and shift into equities if you've gotten good rates of return on your bonds? And you still can. It's all, obviously, as a full disclaimer, you want to talk to any tax professionals before you do this. But if you do this, equities right now have a real potential, especially those income ideas, to have some significant upside, I believe, in the market. I think that the market right now has the opportunity to make some significant gains, not just because of the amount of cash that's sitting on the sidelines, not just because of the amount of cash that's sitting in corporate America, but also the potential for growth in the equity markets. Now, in the equity side of your portfolio for year-end tax planning, you want to take a look at two things. One, do you have losses that you can offset gains? Short-term losses to set off short-term gains. You know, if you've got some stocks that have been hanging out there for the last couple of years and done nothing for you, maybe it's time to say, okay, just pull the Band-Aid, rip it off, get rid of it. And if you can offset it with some stocks that you have a gain on, maybe pair the two up. The other thing you can look at is if you have losses in the stock, you can use some of those losses against ordinary income. Right now, you're allowed to use $3,000 in losses, long-term losses, against your ordinary income. So if you have a stock that's been literally languishing around, you don't know what to do with it, at least take some of the losses and put it to use. And now start looking at what you want to do for next year. The other thing you can take a look at is maybe bring some income before the end of the year by writing calls against some of the positions that you might have. Especially if you have a fixed price in your mind which you'd like to get out of that stock at, well, take a look at the calls. Our next session, for the beginning of the new year, we'll start talking about maybe doing some really good covered call option writing. But for the moment, just for the year-end taxes, maybe just taking a look at a way to bring income, a way to pair off gains and losses, and also maybe a way to look at how to use your bond portfolio and bring it to next year and maybe even increase your income. All these ideas have to be, you should always talk to your professional, whether it's your tax professional or whether it's your investment professional. Or if you're seeking for advice here, you can always call me, Bill Hayes, at Kenilworth Asset Management, 847-920-0400. And as always, may you have a very happy holiday season and a glorious new year, and wish you and your family all the best. Thanks, and have a great day.